Well, the last significant change in legislation was in early 2022. And now, as a reminder, the legislation in Switzerland was modified to increase investor protection and align Switzerland with MiFID rules in the EU. So in many instances, this has created additional requirements for local players, but for overseas fund managers, for example, this in many instances has eased things and has created an easier environment to come and market. Now, 2 years in, we have the opportunity to see how managers have adapted, and it has remained somewhat status quo. People still appoint the typical Swiss representative and a paying agent to attract Swiss investors to their funds. Switzerland has always had a multi-channel approach to distribution. Generally speaking, these channels have been institutional investors, intermediaries, and retail distribution. Now, although traditional advisory is clearly here to stay and has an important role to play, there are new technologies that are improving efficiencies, transparency in the entire process. So today we are seeing these new technologies coming in and new players using these technologies, such as robo-advisors, fully digital banks, and other fund platforms. Swiss investors have always been important buyers of funds. Although this appetite may have waned in recent years, we're starting to see the signs of this trend reversing. As uncertainty in the market increases, investors are now starting to look at funds and specialized strategies that they may have overlooked in recent years. One such example is alternative funds managed by specialized managers that may help to mitigate the volatility that a lot of people anticipate going forward.